And we're
Good
recording.
timing.
Good timing. And looks like we're up at about 136 folks. I'm going to kick this over to you, Jill, to give you a few minutes to talk about First American and all the wonderful, glorious things you do for the real estate community out there. And the floor is yours.
Thanks, Bill. So as Bill said, I'm Jill Shields. I'm with First American Title. I'm the state sales advisor. So I do work across the state of Oregon with sales reps, sales managers, and a lot of you real estate brokers. In fact, looking in the chat, I know that I worked directly with some of you that are on the call. So super exciting. And Jeremy, I can't wait to hear your presentation. I know you said it's going to be interactive, so looking forward to that. Just a reminder for Oregon brokers, we are providing CE credit. I did notice on the registration that some people, it looks like, signed up multiple times, probably for other people. So just so you know, I will throw my information in the chat. If for some reason you don't receive your credit slip, you can just shoot me a quick email and we'll get that right over to you. I also just wanted to chat super quick about an online platform that we have at First American. We did replace My First Stand, which a lot of you had, which is just property information right at your fingertips. We do have a new platform that includes marketing, calculators, property data, farming, all of that. It's called Ignite RE. Also use my email in the chat and I will hook you up with your sales rep somewhere in the state of Oregon and can get you signed up for that. Very huge tool for us. And lastly, just a heads up, and Bill, I think you attended last year. We did just confirm we are going to be having John Mitchell doing an economic forecast 2024. A lot of you know him. It's going to be via Zoom. We had about 600, 700 people last year. It will be mid-February, and we'll keep you posted on exact date and time. So with that, I really appreciate your time, Bill and Jeremy. Can't wait to hear your presentation. Thank you.
Hey, we had one little comment come in. There are some groups of folks together in an office watching together. So if you registered under one person, you are really going to need to send the other names and emails to Jill, or you guys aren't going to get your CE credit directly.
Yeah, and we're happy to do that when you're having a watch party. So definitely, and that's a lot of good interaction too. So just shoot that over to me. I'll put my info in the chat.
And one other housekeeping thing before I give the floor to Ryan is Teresa's going to be monitoring the chat. So we'll do our best. If you're just not getting an answer, you're not getting noticed, raise your hand or just ask your question again, guys, because there's a lot of folks on and it's kind of tough to keep track of everything all the time, but we'll do our best. And I'm going to kick this over to Ryan. Ryan, can you give us a few words of wisdom from your seat and your viewpoint with the RE source as well, and all the contact and connection you have throughout the industry. I think you might be able to lend a little maybe state of the union for us before we get Jeremy.
For sure, and excited to get to Jeremy, so I won't spend too much time. But thanks to Jill and Jeremy and Bill and Teresa for putting this together. I'm excited because, as Bill said, I'm the regional director at Movement. We have one of the largest teams at Movement nationwide, one of the most successful, one of the youngest and most innovative companies around. And believe it or not, if you guys didn't know, but we actually take typically top market share in the Pacific Northwest. So a lot of awesome momentum because of our awesome teammates like Bill and Teresa and everybody that represent those states. So super excited. And also, guys, congratulations on living and surviving through one of the toughest years I think we've ever faced. I remember the Great Recession, and I lived through that professionally too. And I got to tell you guys, it's been an incredibly challenging year. And congrats, because I know how difficult that's been. We actually talk a lot about that. I've been, as Bill said, creating content since before the Great Recession. That makes me an old dog and an OG in content creation. It's called the Real Estate Source, short for the Real Estate Source. That QR code takes you right to a free membership. We'd love for you to be a part of our community, but I just love the business, guys. Even when things are tough, I love it. I roll up my sleeves and go, let's go. Let's do this. One of the stories that we haven't touched on, which is why I'm excited to get to Jeremy, is this topic. I've been watching it out of the corner of my eye, kind of seeing what's going to happen with this. So I'm really excited. But our content, we tend to talk about what's happening in the industry, where we're headed. Our goal is to arm realtors and loan officers nationwide with content that will help them grow their businesses. And it tends to be nerdy, but it's also tends to challenge you too. Like one of the hot topics right now in mainstream media is, are we in a housing bubble? And you'll see stuff like this on Twitter, and like as realtors and loan officers, we got to be ready to be able to respond to that and go, no, absolutely, I don't believe that we're in a housing bubble, but here's why. Not just to say, I don't believe something, but here's some reasons why. Here's a good slide that we tend to talk about. Like this isn't the same back in 06. We don't have the same number of foreclosures. So we have a really cool vintage. Here's another cool slide. Sorry guys, I nerd about the business, so I love stuff like this. But look at all the vintages of the mortgage rates. These people are in a great spot with a ton of equity. It's not the same as 06. And so our content creation has always been around what is the most relevant thing we can talk about, whether it's where rates are headed. Are we in a housing bubble? How do we answer that question? We will always arm you with a ton of content to be able to help grow your business. Our most recent shows, if you follow that QR code, are 2 shows that are really, really good news. We talk about why we feel like the worst may be behind us, which if we could say that, I think we can all agree that's a really, really cool thing. And also why I feel like we're in a really early sweet spot for both buyers and sellers. Got to understand that to be able to articulate that to your buyers and sellers, but I genuinely believe that. And we can, the last 2 shows articulate why. And the best thing you can do is leverage our content. Bill and I were on a call today nationwide. Nice gentleman in Florida was like, hey, is Ryan Hills on the call today? Yeah, I'm here. And said the exact same thing. Leverage that content to help grow your business. That's the best thing we can. That's the best thing for us because we don't charge you. We don't monetize it. We haven't missed a show every Monday. Every Monday we come out for 15 years straight. So love for you to be a part of our community at the RE Source. And also love to have you guys join, movement in our march to continue to take the top market share. So with that, I'm going to throw it back to Bill and Jeremy because I'm really excited about this topic because this is not one I've touched on. And I'll probably have a lot of my own questions, Jeremy.
Excellent.
We'll let you kick off, Jeremy. I'm here. Ryan's here to speak from any of the financing side of things. So as you reach places in your conversation about that, or you want to, pitch to us, we'll be here. And of course, we'll probably have plenty of questions as we go along too. So without further ado, the floor is yours.
Great. Well, thank you all. Thanks, Bill and Ryan and Jill and Teresa and Con. Appreciate all of your support and interest in inviting me in so that we can have this conversation, which I think is a really important conversation for everyone on the webinar today. My name is Jeremy Rogers. I'm the Director of Legal Affairs at the Oregon Realtor. So I run our legal and risk management programs. I'm an attorney. At Oregon Realtors, we have a legal hotline. We produce risk management materials to help our members navigate legal risk in the industry. We produce forums. So all of that stuff is what kind of comes under my purview at the association. I also run our government affairs department, so our advocacy and lobbying efforts. And what we want to talk about today is giving you an overview of the legal landscape that NAR and our industry is facing. Kind of give you a broad picture of that, as well as the details of the particular lawsuit that NAR and some national brokerages lost at the district court level back in October. And then we'll talk about what happened, what are the next steps for NAR and the industry, how does this affect Oregon, what does it mean for your state association, what does it mean for local MLSs, what does it mean for your business, talk about some of the catastrophic questions that are out there. Is this the end of buyer agency? Does it mean that cooperative compensation is going away? We'll touch on those things the best that we can. Of course, we aren't able to predict the future, but hopefully what we can do today is help you separate sort of fact from fiction and get a more realistic sense of what's going on and what may come forward. And then I want to spend some time talking about sort of what we do in response to this. One of the most important things is going to be using buyer representation agreements. And so we want to talk about what those are, what that looks like, and what we're doing at the association to help get widespread adoption of that in the industry. And then, of course, want to talk about sort of the financing of commissions, and Bill and Ryan, and I will look for your expertise on that, because I know that's an important question that's going to come up as we go today. So hopefully that all sounds good, and I'll jump in. So let me start. I'm not going to use slides today. I've done this with and without, and I found it works better without. But I do want there to be a lot of interaction and questions. So please do, pop questions in the chat as they come up, and I'll definitely do my best to answer those. So before though I get into it, there are some things we're not going to talk about today. And of course, what we are focused on today are antitrust lawsuits. At any time we gather with a group of industry professionals, it's important that we're cognizant of what we say and do on this call, and because we don't want to run up against US or Oregon antitrust laws. So I'm going to start off actually by reading our Oregon Realtors commitment to antitrust compliance, because it'll help set a good framework in terms of the things that we're not going to talk about today. Okay, so Oregon Realtors, we're a nonprofit trade association. We're devoted to improving the business conditions of the real estate industry broadly in Oregon. We have meetings and events that include real estate professionals from other industry stakeholders who compete with each other or work for competing businesses. Oregon Realtors is committed to conducting all meetings and events in a professional, ethical, and lawful manner, including in adherence to all antitrust laws. To that end, the topics of this meeting will focus on advancing the interests of the real estate industry professionals and consumers of real estate industry services, increasing competition, reducing risk for all parties involved in transactions, and sharing insights on best business practices. The following discussion topics are always prohibited: fixing, controlling, recommending, or suggesting the commissions or fees charged for real estate brokerage services; fixing, controlling, recommending, or suggesting the cooperative compensation offered by listing brokers to potential cooperating brokers; disparagement of competitors; limiting product or service offerings; allocating geographical territory or customers; and refusing to deal with any market participants. Okay, so none of those things we want to talk about today, and really we'll shut that down if those issues come up. Okay, all right, thanks for letting me go through that. So let's get started on just a kind of a broad overview of the legal antitrust primarily issues that are facing the NAR and the real estate industry more broadly. So NAR is really kind of fighting on multiple fronts right now. Much of it related to what is called the cooperative compensation rule, which is a rule that NAR has in its MLS policy handbook that is the rule that instructs local realtor-owned MLSs to have a policy that requires the listing agent to communicate an offer of compensation to the buyer's agent in a transaction. Okay, so we'll talk more about that, but that's the kind of crux of it. There are multiple fronts where this is going on. So there's been lawsuits brought by sellers, and the main one we'll talk about today, where there was a verdict in October, was one of these lawsuits brought by sellers. That lawsuit and others that are making the same arguments are class action lawsuits, okay? Meaning that the sellers that are bringing them forward are plaintiffs, as well as a class of sellers who are similarly situated. Now, not all of the lawsuits have been certified yet as class action, but some of them have. And there have been, in addition to the main lawsuit, we're going to talk about the Sitzer-Burnett lawsuit that was filed in the Western District of Missouri, and then a verdict came down in October. There is one other one that's brought by sellers targeting this cooperative compensation rule that is actually even a bigger lawsuit, and that covers a broader scope of geography of MLSs and of sellers, and that one's has not gone to trial yet, but will likely by the end of next year. That's called the Morrill lawsuit. And then there have been probably a dozen copycat lawsuits that have been filed since the verdict came down in the Sitzer-Burnett lawsuit, which is the one that had a verdict in October. And they're all arguing similar things. So we'll go through the Sitzer-Burnett one here shortly, and you'll have a sense of what all these other ones are about. But bigger picture takeaway there is that, there's a lot of fronts that NAR is fighting on, and now local associations, local MLSs, and local brokerages are being wrapped into these copycat lawsuits. Okay, so there are several of these copycat lawsuits now have named state or local realtor associations, the MLSs in a particular region, brokerages, and even teams and individual brokers from those regions. The next set of lawsuits that are out there, they haven't been certified as class actions yet, but that they are proposed class actions, are lawsuits brought by buyers. Now, the lawsuits brought by buyers are also targeting the cooperative compensation rule, but they're coming at it from a bit of a different angle. So the main argument that the sellers have been making is that by requiring the listing agent to communicate an offer of compensation to the buyer's agent, that sellers have paid more in total commissions than they otherwise would have, because had they not felt compelled to offer compensation to the buyer's agent, then they either wouldn't have done it or they would have offered less compensation. But they felt like, again, not agreeing with these claims. I think there's a lot of holes in these claims, and we'll talk about the appeals that will happen. But their claim is that, hey, they didn't understand that was negotiable, and that they ended up paying more to the buyer's agent than they otherwise would have. The buyer's agent's lawsuits are taking a bit of a different angle. They're saying, because of the cooperative compensation rule that requires the listing agent to communicate an offer of compensation to the buyer's agent, my buyer's agent never engaged me directly in a conversation about how much commission I was going to pay them. And I still ended up paying it because I paid a higher price for the house, because the commission price was built into the price I paid for the house. Therefore, had I had an opportunity to negotiate directly, I would have had an overall lower financial load burden on me. Okay. So that's their argument. Those haven't gone to trial. Those are newer. They haven't been certified as class actions, but there are some of them that are nationwide in scope that, if certified as class actions, would even include, home buyers from Oregon, for example. Then there are another set of lawsuits that are not related to the cooperative compensation rule, but rather to, and I know it sounds similar, but the clear cooperation rule. Okay. And the clear cooperation rule is a different rule. This is a newer rule that was from 2020, where NAR established a rule saying that on a realtor-owned MLS, if you are listing a property, or excuse me, if within a business day of advertising a property for sale, you have to list it on the MLS. Okay. That was the clear cooperation policy. And those lawsuits are being brought challenging that policy as an antitrust violation, essentially saying that it sort of stamps out other ways and opportunities of advertising properties, including other groups that want to compete with the MLS and be a marketplace for showing properties. It sort of stamps them out because it forces everyone to list properties on the MLS. So those, again, haven't reached a verdict. They're not as far along, but that's out there and something NAR is also fighting. Then there is a probe from the Department of Justice. That actually started back in 2019. It was related to these similar issues around buyer broker compensation, but not just the policy that the listing agent communicate an offer of compensation to the buyer's agent, but other concerns such as buyer's agents advertising their services as free, that MLS listings not showing the buyer agent compensation in the publicly viewable and available feeds from the MLS, and some other concerns. A lot of those issues actually were addressed already by NAR. NAR updated its policy to say that buyer agents cannot advertise their services as free, that the MLS publicly available listings and feeds need to show the BAC, because they reached a settlement with the DOJ on these issues. But what happened was in 2020, when the administration changed from the Trump administration to the Biden administration, the DOJ tried to pull out of the settlement that they reached with NAR and said they still want to continue to investigate NAR for these and other antitrust concerns. That issue has been now in legal wrangling where NAR said, no, it was a deal. It was a settlement. You agreed to close the investigation. We've changed our policies. You cannot reopen that investigation. The Department of Justice said, no, we can. And that's been legal wrangling. That recently went to a court of appeals where there's been no ruling, but the judges on the panel that were reviewing the case seem to be more sympathetic to the Department of Justice and saying that they will be able to reopen that investigation. So we'll see. But in addition to these seller and buyer lawsuits, NAR may be soon again dealing directly with the U.S. Department of Justice on some similar issues as well.
Jeremy,
Yeah.
there's a question. It came in saying, I thought the buyer's lawsuit had been dismissed. Are there new ones?
Yeah, there are new ones. And there was one filed since the Sitzer-Burnett verdict that is probably the biggest of all of these in terms of its nationwide scope and the amount of damages being claimed. Again, the buyer ones are at such an early stage. There hasn't been rulings on whether they're going to be certified as class actions. Hasn't gone through like summary judgment motions where, you know, a judge gets to decide, hey, is there even really an issue to try here, or is this just really not a case? So there's a whole bunch of things that will happen between now and you know, over the next year or two related to those, but they are out there, and they are large lawsuits in scope and in the damage awards if the plaintiffs were to be successful. So let's talk more about the Sitzer-Burnett lawsuit. Oh, go ahead, Bill. Yeah.
Quick question before you dive in. You know, is this new? Like all this litigation in regard to, I mean, everything you just covered, is this all relatively new, like 2019 forward, or has this always kind of been going on at some level, or is it amplified?
Well, NAR has always been the subject of antitrust concerns, right? Because it's a large trade association. It you know, has these rules and policies that the local MLSs follow, but we haven't really seen this level of sustained pressure before, and not on this particular rule. There's been cases in the past on the issues like, does the fact that you have to be a Realtor member to be a member of the MLS, like, is that an antitrust violation? There's been a series of those cases over the year. NAR has won those cases. Back in the 80s, there was a big rush of litigation and concerns about a different issue, which actually kind of is a precursor to why we're here today, which was back then, there wasn't fiduciary buyer agency. The buyer's agent was a sub-agent of the seller and the seller's agent, right? And so in that scenario, when the cooperative compensation was being offered to the buyer's agent, it was being offered to a person who actually, you know, was aligned with the listing agent and the seller, not with a buyer. At that time, there was a huge consumer advocacy push to change that. There was lawsuits and there was just campaigns. I think Ralph Nader was even involved, saying, hey, buyers should have direct representation. And so every state, NAR updated its policies, every state changed its real estate codes to create fiduciary buyer representation, where the buyer's agent has duties of loyalty and confidentiality and to look out for the best interest of the buyer. What didn't change was that compensation model where the seller's agent was offering the compensation to the buyer's agent, right? And so I think a lot of the lawsuits bringing forward today, people don't even realize or remember that time, right? And, you know, some concerns are, of course, hey, if the plaintiffs in these cases win, we're going to end up going back to the day where you don't have fiduciary buyer agency, you know, and that would be a really bad thing for consumers. So sometimes these things kind of come full circle and people forget about what happened before. But, you know, I think that's part of the issue, is that the model changed in representation, but the compensation model stayed the same. And now those two things are starting to come to a head.
Gotcha.
Jeremy, here's another question. Has Sitzer-Burnett judge ruled yet after the jury verdict?
No, so the Sitzer-Burnett jury verdict, I think it was October 31st. They've set a schedule for some like post-trial motions. So we don't know the details of those motions, but NAR likely will be trying to reduce the damage award. They could argue for a mistrial if there was something that happened that they believe made the trial fundamentally unfair to them. They could argue for what's called a judgment notwithstanding the verdict, basically telling the judge, hey, judge, there's no way that a reasonable jury could have reached the conclusion that this jury reached. So you actually should like essentially overturn what the jury did, because no reasonable jury could have reached that conclusion. So there's different maneuvers you can make to try to improve the outcome. I think, on the damage award, maybe some success NAR could have. On the mistrial, I don't know. I don't have the trial transcript. I don't know exactly what transpired, so I'm not sure about that. Judgment notwithstanding the verdict, I think that's pretty unlikely that they would get that. That's a pretty extreme case where that would happen. But the schedule for that is starting in January. So I think NAR will submit its motions and briefs on those issues or whatever issues they decide to bring forward around late January, and then the plaintiffs will respond, and then over a period of a couple of months that'll get figured out. So probably be sometime in the spring when we have an answer to those post-trial motions. And then that's still all at this district court level with the district court judge. And then beyond that, there will be the appeals that go up to the 8th Circuit Court of Appeals. And then depending on the outcome there, would go to the Supreme Court after that if whoever loses at the 8th Circuit appeals. And so, that whole process would take years, of course. So, just, I kind of covered all this mostly, but I'll just do another quick hit so everyone understands kind of the basics of the Sitzer-Burnett lawsuit and sort of what did the plaintiffs have to prove and what was that issue there. So this was in the Western District of Missouri, and there was named plaintiffs, about 5 named plaintiffs, but it was certified as a class action. The class was all sellers who had listed their home on one of the MLSs in the region that's covered by the Western District of Missouri. So this is the St. Louis area and some surrounding areas. Between, I think it was 2015 and 2019. Okay, there's a 4-year statute of limitations on the antitrust claims. And so all of these lawsuits tend to go in a 4-year increment. So the ones like Sitzer-Burnett was 2015 through 2019. The ones that are being filed today, you'll see, are mostly like 2019 through 2023. They arguing that this cooperative compensation policy was essentially a conspiracy among various players in the industry, including NAR, to inflate commissions. And I'll walk through more of sort of what the elements of that antitrust claim. So the damage award amount that they were looking for was $1.78 billion. And that's what they were awarded when they won the case. And then that is almost always tripled, something called treble damages, where these antitrust statutes, as an extra incentive to try to prevent antitrust violations, allow for essentially an automatic tripling of the damage awards unless there's some extreme reason why that shouldn't be the case. So that would bring that up to $5.36 billion verdict. So that's what we're dealing with. But at issue in the case was, so the federal Sherman Act is one of the primary antitrust statutes at the federal level, as well as the Missouri antitrust law, which essentially is a state version of the Sherman Act, and then also the Missouri Merchandising Practices Act. So this is sort of like a fair trade practices act that every state has. So the plaintiffs in this case said that NAR and the other defendants were violating all of those acts. The other defendants in the case, in addition to NAR, initially were what at the time was called Realty, which is now Anywhere Real Estate, Berkshire Hathaway Home Services of America, Remax, and Keller Williams. And we'll talk about it a little more, but Remax and Anywhere actually settled before it went to trial. And we'll talk a little bit more about the terms of that settlement. So at the end of the day, when the verdict was issued, it was against NAR, Berkshire Hathaway Home Services of America, and Keller Williams. And so I mentioned the main issue is that NAR MLS handbook policy. And what it says is, and I'll just quote, in filing property with the multiple listing service, participants make blanket unilateral offers of compensation to the other MLS participants, and so shall therefore specify on each listing filed with the service the compensation being offered by the listing broker to the other MLS participant. Okay, now there were some other ancillary rules and parts of the code of ethics that were cited in the lawsuit, but this is sort of the big one, and the main issue they're taking with is that you're requiring listing agents to and really what the rule says, it must be communicated, right? And I think there's a difference in that, but essentially what the sellers were saying is that you're requiring listing agents to compensate buyer's agents, and as a result, we paid more to the listing agent than we otherwise would have. So the elements of the antitrust case that the plaintiffs had to prove out here was, one, was there some form of contract, combination, or conspiracy between multiple parties? Did that contract, combination, or conspiracy unreasonably restrain trade? Did that restraint of trade affect interstate commerce? And was the restraint of trade a material and but-for cause of the injury to the plaintiff, even if it was not the sole cause? Okay, so those are the elements of an antitrust case. Of course, NAR's argument was that, that one, first of all, there's no conspiracy here. Okay, this is a policy in a handbook. It's not a conspiracy, and it provides tremendous benefits to consumers. First of all, agents have a right to know how much they're being compensated before they enter into a transaction. So by requiring the listing broker to communicate an offer, that's just fair to all parties. Like, that's all the rule is doing. You have to communicate what the offer of compensation is. The buyer's agent, of course, should know that before they engage in services of bringing a buyer to the table for that transaction. That this system overall, where a listing agent compensates a buyer's agent, actually benefits the seller tremendously. It exposes their property to the maximum number of buyers and agents out there in the marketplace. The reason why the MLS exists and functions is that there's an incentive for everyone to be involved and for everyone to list properties there. And this cooperative compensation policy is, one of those primary incentives to do that. Buyers benefit from a centralized marketplace of properties. In other countries where you don't have an MLS that functions this way, a buyer may have to go to each individual brokerage to see which properties they're offering, but there isn't cooperation among brokers to show all the properties, right? So, and of course, every seller is likely at some point in their life also going to be a buyer. So to the degree that a seller is saying here, I was injured on the seller side, well, if you were injured on the seller side, that probably means you were benefit on the buyer side. And if that's true, you're a wash here. You didn't really have, damages that you can claim. Buyers through this rule and not being required to pay for their agent out of pocket allows for both agents to be represented, which allows for more efficient transactions to take place and for both the seller and the buyer to ultimately be better off. So NAR, had a lot of arguments, a lot of them relating to the overall sort of economic efficiency and benefits of this system. Unfortunately for NAR, though, there was a ruling made by the judge early on in the case that prevented the jury from really taking a lot of that into account. Because when you're dealing with an antitrust case like this, there's really two different ways that it can be analyzed. One way is called the per se rule. So the per se rule exists in price fixing cases, and this is a price fixing case. That was the ultimate argument that NAR, through this rule, that they were inflating commissions, which is a price fixing issue. They said that and the per se rule it typically applies if you have a conspiracy among competitors that's so obvious and blatant that if it happened, it's a violation. You don't have to go through and prove whether or not consumers ended up being benefited or harmed by it. If it happened, it's a violation. So, for example, if you had a bunch of real estate brokerages sitting in a room, all competitors, just working together to say, let's pick a price we're going to charge consumers, that would be a per se violation. The jury would just have to decide, did it happen? Did they sit in a room and did they do that? If so, they violated US antitrust laws. We don't need to talk about whether or not the price they chose ended up being good or bad for consumers, okay? The other way that you can do an antitrust case is called the rule of reason. And the rule of reason is more of like a reasonableness test where both sides do bring forward arguments about whether the consumers were ultimately harmed, whether this system that's in place is going ultimately, benefits or hurts consumers, where you take into account whether there was an intent to fix prices and, whether the overall result actually benefits or harms consumers. So that type of analysis would clearly benefit NAR. But the judge ruled early on this is a per se case rather than a rule of reason case. So in many respects, NAR, and not in all respects, but as soon as that happened, the deck was sort of stacked against NAR. And that's going to be one of the issues that they take on appeal. Of course, they're going to, on appeal, try to argue to the Eighth Circuit. And now, of course, we haven't seen their appeal. We don't know exactly, but presumably they're going to argue the judge made an error, a legal error in making that conclusion. This should have been a rule of reason case, given that we're talking about a trade association policy, not a group of people sitting in a room and picking a number. And if they were to win on that argument, that would really create a new day for them. And this would have to go back down to the trial court level and be retried using the rule of reason analysis. Okay, so we can all hope that NAR would be successful in that argument. Another issue. Oh, go ahead, Bill.
No, I was just crossing my fingers. That's good news.
Yeah. And another issue that is likely to be on appeal that was an early decision made by the judge that also kind of not just stacked the deck, like even let the case go forward, was the issue of standing. Standing is legal doctrine. The U.S. Constitution says that the courts can hear cases and controversies. Okay, so they don't make policy judgments and rules. That's for the legislature. There has to be an actual case or controversy. And that means that the person bringing the claim has to be the person who is actually involved in the case or controversy. So we have a doctrine called standing saying, is this the right person to actually bring this claim? And in an antitrust case, to have standing, you have to be the one that was directly harmed. You can't be the one that was indirectly harmed. And here, the argument that the sellers are making is that I paid you, listing agent, a commission, and you paid a portion of that to the buyer's agent. Well, then they weren't the ones directly paying the buyer's agent, right? And so NAR made the argument that, hey, they're not the right plaintiff here. This was an indirect harm. We negotiated a commission, and then we gave some of that to the buyer's agent, but they never directly paid the buyer's agent, so they can't be claiming the harm from that. So the judge said, no, it's true that you have to be the direct, directly suffer the harm in an antitrust case. It's arguable maybe that this is indirect, but I'm going to let it go forward anyways. And so that's an issue that NAR likely will take up on appeal again, was, did these sellers even have the standing to bring this claim in court? So again, another opportunity, hopefully, for NAR to be successful on appeal, but we'll see. So I mentioned that there were some settlements along the way. So Anywhere and Remax settled. And I mentioned the total damage award in this was like 1.78 billion, which tripled to 5.36 billion. So the settlement amounts for Anywhere and Remax were a lot lower than that. So they settled Anywhere for like $83 million and Remax for 60 or 65 million, as well as for making some policy changes. Fortunately for Anywhere and for Remax, most of the policy changes they agreed to were things they were already doing or things that NAR is already requiring, because as I mentioned, NAR has actually made a series of changes over the last few years related to some of these policies. So it was things like not telling buyers that the services are free, not sorting listings based on the BAC, and showing buyers all properties regardless of the BAC, not having a company-wide policy related to their franchise brokerages about, how much BAC to charge, things like this. The one thing I would say that was most notable was, BAC to offer. What was notable was about joining NAR. So one of the things that both Anywhere and Remax agreed to in the settlement was that they would not require their franchise brokerages to join NAR. Now, this was misconstrued in the newspapers because a lot of newspaper headlines said another brokerage leaving NAR. But that's not what happened. It's just a corporate policy saying, hey, franchisees, you don't have to join NAR. Of course, on an individual brokerage level, many and most, I think, will continue to choose to join NAR for a variety of reasons. So it wasn't like a requirement that they not join NAR, just not having a requirement that they do join NAR. Okay. Oh, go ahead.
Oh, I'm sorry. I don't mean to interrupt. I'm going to back you up one quick second. There was a question about what year did the fiduciary buyer representation begin?
So it happened in it all happened in a cluster, starting with California, I think in like the late 80s, and then in most other states between like 90 and 94. I think Oregon updated its statutes to create the fiduciary duties for a buyer's agent somewhere around 1992. But don't quote me. It was within a few years of that. And it was like almost all states did it around that same time because it really was a nationwide movement, kind of like what we're dealing with now and what you're going to see now related to the use of buyer representation agreements and everybody doing those and probably legislating them. It kind of happened in a wave. So Anywhere and Remax, who knows how they're feeling now. In some respects, they're probably feeling great because they're not part of the $5.36 billion award. However, if NAR wins on appeal, both of these companies shelled out tens of millions of dollars in a settlement, right? But I think in part, what they were trying to do was protect their local brokerages and their franchisees from having to go through litigation. One of the things that they gained from the settlement was that, hey, we are now settling all similar claims for our franchisees and local affiliated brokerages, which now, of course, with all these copycat lawsuits popping up across the state and naming even brokerages in those local brokerages, likely Anywhere and Remax feeling pretty good about that because their local brokerages are not going to be subject to that. Now, again, I mentioned there's these buyer lawsuits. These settlements were related to these cooperative compensation claims related to the seller lawsuits. So it's not as if these companies couldn't get brought into future lawsuits coming from a different type of claim, but related to this particular claim, they have a little bit more insulation now. Let's see. So next steps, we talked about NAR is going to file a series of post-trial motions at the district court level. But presuming that, they're not going to win a mistrial or overturn the verdict there, they're going to have to go up on appeal. They'll go to the 8th Circuit Court of Appeals. They've hired the best appellate attorneys in the country. So Paul Clement is on the team. Paul Clement was the Solicitor General, which is like the chief advocate for the government in front of the U.S. Supreme Court. So he was the Solicitor General during the Bush administration, and he's argued probably hundreds of cases in front of the Supreme Court. He appears probably 5-10 times a term in front of the Supreme Court. Probably argued more cases there than anyone else alive today. So he's top notch, and they've hired other top notch appellate attorneys. So that's good news. NAR will have to post a bond that shows good faith ability to pay the damages at the end of the day if they do lose on appeal. This is a lot of money that we're talking about. And so they have said that they are able to post the bond. I think the bond amount is still being determined, but we don't know the details of that. Like, where is that money coming from? How will it impact NAR's operations? I think that's all things that we will learn in the coming months that we don't know now. There are, of course, questions coming up about will NAR file bankruptcy? We don't know. I mean, again, if they're able to post the bond and they feel strong on appeal, I'm sure they'll take that route. It, of course, depending on the outcome of appeals or how strong they believe their arguments are, at some point, if they do have to reckon with the damage award, then I assume bankruptcy would be part of the conversation. And I think one huge issue out there now is can NAR do something to stop the copycat lawsuits, right? In my mind, regardless of whether they appeal or whether they try to settle now, because if, for example, if the plaintiffs believe that NAR's arguments on appeal are strong, they believe that NAR might win that rule of reason argument, that, hey, this should have been rule of reason rather than per se, or they may win that standing argument, then the plaintiffs are going to have an incentive to settle. So it doesn't go up on appeal. So there's still room for NAR to settle. But whether it's getting to an appeal or settling or whatever they do, NAR figuring out a way to get incorporated into that, a sort of stay on all of these copycat suits that are across the country, I think is really, really important, because if it takes years for NAR to get to an outcome of the appeal, and meanwhile, every state and all the MLSs and tons of brokerages within, those states are paying hundreds of thousands of dollars to attorneys to fight their own similar lawsuits. I mean, how are they going to do that? How are they going to afford that? How are local associations and brokerages going to do that? So, for our whole system here of NAR, state, and local associations to continue functioning, it seems as if there needs to be a solution for the copycat lawsuits. I don't know what that solution is. I know it's part of NAR's thinking, but I think we're just all kind of waiting to learn more about what their strategy is.
Hey, Jeremy, here's a different
Yeah.
question for you. This one came up with, don't buyers have the right to know the compensation on each property so they can determine if they want to see it, if it means they may be the one responsible for the buyer agent compensation if it's not offered by the seller?
Yeah. And here, is where, and we'll talk more about the use of buyer representation agreements as something that's key going forward. But I think if you have a buyer representation agreement with your client and they have agreed to pay you a certain amount and they know they're on the hook for that amount, and they make the decision that they don't want to see properties that aren't offering cooperative compensation because they don't want to actually have to pay out of pocket for that amount they owe you, that's a decision that they as a principal and you as the agent, it's a decision they can make and that you would follow. Okay. But what you don't want to do is, absent an instruction from your client like that, to only show them properties that offer BAC or a certain amount of BAC and limit their choices. But just like anything else, if your client is instructing you to do it and it's not otherwise unlawful, you should do it because you're their agent and you need to follow their instructions and be loyal to them. So let's talk more about now kind of what does this mean? So what does it mean for the state association and local associations? Well, one, it means we're going to be doing a lot more of this out there, explaining to you what this is all about, helping you understand what it is, what it isn't. It means that we're going to be heavily promoting the use of buyer representation agreements and training people on how to use those. And we're actually bringing forward legislation in the 2024 session to require the use of buyer representation agreements, because we've heard from our members that even though many of our members may understand the value and the use and the benefit of a buyer representation agreement, because buyers go down the street to another agent who is not asking the buyer to sign a buyer representation agreement, that it's difficult for the industry to fully adopt that practice unless there's a level playing field. And you have buyers saying, hey, why is this agent down the street not asking me to sign a contract? You're asking me to sign a contract. So trying to create a level playing field so that we all can move forward. And we'll talk more a bit about what is the buyer representation agreement and why is it, at least in part, a solution to all of this stuff. So we'll talk about that. What is, if, it could be that state and local associations get named in copycat lawsuits, and that's, going to be something we would have to reckon with. Oregon Realtors, we don't run or own an MLS. The primary claims here are about the cooperative compensation rule, which is a rule for the MLSs. And so many state associations do run MLSs. So I think while anybody can be sued for anything, I don't see the claim against Oregon Realtors because we're not involved in the cooperative compensation rule. Okay, that's NAR and local MLSs. but we'll see what happens. So that could happen. Copycat lawsuits. The MLSs, how are they responding? In addition, they could be named in copycat lawsuits, but they are also updating their rules right now, if they haven't already, to allow zero to be entered in as the cooperative compensation through the MLS. Okay, so that was one thing NAR did in advance of the trial. NAR had always said, and it's, well, first of all, it's always been the case that no particular amount of compensation needed to be offered. I mean, that's the crazy thing about all these lawsuits, is that there wasn't any price fixing going on. Anybody could have always offered a penny or $1 million, right? You could offer anything. It was just about communicating an offer of compensation. But NAR has even further clarified that zero complies with the rule. So as long as you're communicating an offer of compensation, even if it's zero, you are complying with the cooperative compensation rule. And so the MLSs are all updating their systems to allow zero. Okay. Now, some MLSs had already done that. Northwest MLS, for example, a few years ago, got rid of the cooperative compensation rule. I think not only were you able to enter zero, you didn't have to enter anything. What they've seen up there, though, is that in 95% of the cases, you're still seeing cooperative compensation offered, right? And so it really hasn't affected a whole lot. The difference, of course, with what's happening now is that there's a lot of publicity and press around these lawsuits. So there's going to be higher awareness of this issue and conversation. And so it's yet to be seen whether or not it will change consumer behavior around their desire to offer cooperative compensation now that they're hearing more about this. Okay. Now, of course, I think the benefits of offering cooperative compensation are so high. I think in the long run, even if we see temporary changes in practice, I think in the long run, it's actually going to be continue to be the dominant model, because it is so efficient at bringing buyers to the table and ensuring a centralized marketplace of properties. But we'll see. So in terms of what you should be doing, how does this affect you? I would say, a few things that if you weren't already doing, that you really, really, really need to do. On the listing side, you absolutely have to be very clear and detailed and transparent with your sellers in walking them through the listing agreement and having a conversation with them about what, if any, cooperative compensation that they want to offer. Okay. So on your listing agreement, whichever one you use, right, there's a separate entry there for the total commission and then the amount that's going to be offered as cooperative compensation. And you really need to have a separate conversation with your client about that. Let them know. You can have a conversation letting them know the benefits of cooperative compensation, okay, and what it might do in terms of exposing their property and trying to maximize the number of buyers that it can bring to the table. But they need to understand that they don't have to offer anything. You can put zero in and just walk them through all of that and then come to a decision. Documenting that, documenting that you've had that conversation and that your client is aware that they it was their choice as to how much cooperative compensation was offered, and that they ultimately chose to agree upon whatever you put in the listing agreement will be helpful to you. A lot of the sellers in these cases are claiming, well, yeah, there was a separate line on the contract for how much we'd offer in cooperative compensation, but I don't remember having a conversation about it, or we just glossed over it, or whatever. So having it be clearly documented that you had that conversation and that your client, whatever you landed on was a decision that your client agreed to and supported. That's important. On the buyer side, the most important thing you can do is use the buyer representation agreement. Oregon Realtors and our forms, we have a buyer representation agreement. OREF and their forms has a buyer representation agreement. I imagine as these become more common, brokerages will have their own. The key elements of a buyer representation agreement are, it's essentially a listing agreement for the buyer side. You're going to communicate in that document what services you're going to provide to your buyer. Your buyer is going to communicate to you what they're going to compensate you for those services. Okay. Just like any other contract for professional services, these are things we do in our lives all the time. Shouldn't be foreign. Shouldn't be foreign to you. Shouldn't be foreign to your client. But I know that, you know, a lot of folks haven't used these over the years, so it is a culture change that we have to make together. I mentioned we are working on legislation to require their use, but even if that legislation passes in 2024, it wouldn't go into effect likely till January 1st, 2025. So we really need to just move there as an industry even before it's required.
Jeremy, there's a
Yeah.
slew of questions kind of piling
Yeah.
up
Yeah,
as we
let's
hit
pause.
this rather hot button. So let's get through some of those. Let's see, where did you see where it started, Teresa?
So, well, I'm going to ask this question because this question I think is going to answer a lot of what the other ones are going to ask. This question is for Jeremy as well as Bill and Ryan. Has there been progress made on a new form to function as a buyer's request for commission assistance? And will that form function in such a way that it separates commission assistance from closing costs? So that was one piece of it. And then relating to closing costs, another question very similar, which was, can we offer overpriced to compensate for the buyer's agent, such as we do now for closing costs? Does this just become another closing cost? So I think those two questions are kind of tandem.
Yeah. Well, so let me tell you what we're doing, and I can't speak for OREF, but I know OREF is coming out with forms updates. I assume they're going to have something on this too. What we're doing in the Oregon Realtors forms is we're updating our sale agreement, and then we've created an addendum as well. So in the sale agreement, on that first page that we have that goes through all the key terms of the deal, there's a financial terms section. In that financial terms section, the parties list the amount that this, if any, that the seller is contributing to buyers' prepaids and closing costs. Okay. What we do now is we were adding a section below that, right below it, saying, is any of the amount above, okay, and how much for paying buyer broker compensation? And then if the answer is yes, and you put the amount there, you move on to our addendum. And then our addendum is used to kind of lay out the details of that, make it clear that, you know, this is going to, you know, offset what the buyer owes their agent and the buyer representation agreement. You know, make it clear that this is separate and distinct from any cooperative compensation that's already being offered by the listing agent to the buyer's agent. Because you can imagine a scenario where there's some cooperative compensation offered from the listing agent to the buyer's agent, but not enough to cover what the buyer owes their agent via the buyer representation agreement. And then the buyer is using the sale agreement to make up the difference, right? So our addendum kind of is going to be the place where you can spell all of that out and everyone's clear in distinguishing between the listing agent offer of compensation to the buyer's agent and the amount that's being agreed to here in the sale agreement. And so essentially the way it would work there is that the seller is contributing to the buyer's closing costs. This will be treated as if it's just, this will be treated like any other closing cost of the buyer. What that means, and Bill and Ryan jump in if I'm wrong on any of this, but what that means is that seller can pick it up. Yes, you could offer a higher price, but it will be subject to the limits of seller contributions to buyer closing costs that are dependent upon the down payment and loan type.
Yeah, that's an interesting statement, Jeremy. I don't know if you guys have just decided like we're going to take that stance at this point, and to back up a little bit, like there is, you probably remember it better than I do. There's policy already written by Fannie Freddie that discusses contributions from the seller to the buyer's closing costs. And there is a clause in there that exempts fees traditionally paid by the seller.
Yeah.
But it doesn't define what those fees are. And since Jill's on the call, it traditionally has, I think, been meant for title insurance. Because the insurance is really for the buyer, but it's traditionally paid by the seller. But here we are facing agent fees that, you know, have traditionally been paid by the seller, but they're a buyer fee. So will that fall into that category? Will it not? I don't know yet.
Yep.
And I don't think Fannie or Freddie knows yet either.
Agreed.
Is
Agreed. I mean, it's good that it's there because there's an argument. There's a strong argument to make to say, hey, this should not be subject to the limitations because it's traditionally paid by sellers. But yeah, until there's an interpretation there, we don't know. And so I guess each lender will make its own interpretation and as it's underwriting loans. And so I guess I was I was stating the more conservative approach, but
I
I
think
do.
that's the more likely approach, Jeremy, in
Yeah.
terms of how you wrapped it up and stated it. I think that's the most likely approach. I mean, this has been way more complex with way more variables than even I knew. So I'm sure the realtors on the call are going, holy smokes, what's this mean to me as a realtor in Oregon, which you just answered that question. But in terms of it essentially comes into the closing costs, like you said, and you can, and Bill, and maybe, I don't know, the NBA has been quiet on this. So we just
Correct.
had our national convention and, NBA is just trying to figure out how to right size all these different IMBs and banks and stuff. And so I think they're waiting, again, as you said, there's so many variables. They're kind of waiting to see how this really plays out and how long it takes before the NBA. And they'll go to the GSEs and the GSEs will weigh in. This won't be, the good thing, guys, is it won't be like Wells Fargo has an advantage over your local mortgage banker or broker. The GSEs will weigh in and they'll help us interpret that, whether Bill's right and it's a fee customarily paid by the seller. That'd be kind of nice. Or if it's just a closing cost, like Jeremy said, that probably seems like the most likely outcome to me.
Yeah, and I think another really important statement from the financing side of things is that we don't finance fees. Like let's just get that on the table. We don't finance appraisal fees. We don't finance title insurance. We don't finance the credit report. What we do is like we get contributions from the seller to pay those fees from time or other, I guess, down payment assistance programs or things like that occasionally pay those fees. So we can't directly finance a broker's commission, but we can manipulate financing to say if they were putting 20% down, maybe now they're only putting 17% down. And yes, mortgage insurance and different things would come into play, but it would free up capital to pay large fees like a broker commission that needed to get paid. So yes, it will be important to be connected with your lender and discussing these things up front and who's going to be responsible to pay it and where's that money going to be coming from, because we need to be able to structure financing properly to leave enough money in the coffers to pay something if it needs to get paid.
Bill, I'm so glad you brought that up and framed it that way because I feel like people are trying to act like this is different or treat it differently than other closing costs, and it really isn't. I mean, again, maybe there's an interpretation saying it's customarily paid by sellers, so it's different in that respect, but it's not like, all these other closing costs can be directly financed, but this one can't. I feel like some people feel that way, and that's just not accurate. Although, are there any? Do any of is the loan origination fee, is any of the closing costs directly financeable? No. Okay.
No, it gets confusing for people because when you refinance your house, you do finance your closing costs a lot of the time. And that kind of graze the area up. But in a purchase transaction, no, those fees have to get paid.
Yep.
And they have to get paid either by the buyer or the seller.
Yep.
Or rarely in occasion, like a down payment assistance program offers funds to cover closing costs. But outside of those three scenarios, they never get financed.
Got it. I think that's an important message to be delivering right now because I just can't tell you how many times I'm in this conversation and people act like it needs to be, that it's being treated differently and that the federal laws need to be updated. And it's true. Again, I think it'd be great if the federal laws were updated to, provide more flexibility or interpreted to provide more flexibility on, how much sellers can contribute, but it's not as if, there's some preferential treatment for other types of closing costs.
No. And, Fannie and Freddie kind of operate like the law. There's only so many laws, so many rules, and then the rest of it's left up to interpretation, right? And this is what we expect. This is how we interpret that rule or that policy that we placed out there. So they may never update their policy. They just may interpret it over time as to how we have to treat these things. And that's gonna just, we'll see where.
Jeremy,
we
I
go.
hate to oversimplify something that is obviously way more complex than I knew. But yes, it could be just a closing cost, like you said, and we'll handle it like we do everything else. But is a possible outcome that is kind of like what you said earlier, that we're a little bit more transparent up front, and it doesn't necessarily, I think everybody goes to the worst case scenario, like nobody's going to pay it, it's going to be on the buyer, and that's going to be a difficult conversation to have. Or some, you mentioned some other states are already doing this with the cooperative compensation agreements and the buyer's representation agreement. Can that be a likely outcome where it's just that we're a little bit more transparent with our disclosures up front?
I think, I mean, honestly, and this, and maybe I'm biased, although I'll tell you, when I came in, I've worked for the association since 2019. When I came into it, I didn't understand the full benefits of the MLS and what it does, but I've come to learn them. And now that I understand it, I believe in the long run that that is the most likely outcome, because you get the transparency benefits from the buyer representation agreement and from always having a clear conversation with your seller about their options on BAC. But the most efficient and beneficial arrangement for both parties will continue to be the seller and the seller's agent offering cooperative compensation, maximizing exposure of the property and the ability of buyers to afford the property, and pay for representation. And so that will be the result at the end of the day. We don't know. And it may go through a dip where people, I could imagine a period of time where the people who think they're super smart start saying, well, I just won't use a buyer's agent. I'll go directly to the seller, and they'll get screwed, the seller's agent, and dual agency will go up for a period of time, but more people will get screwed by that. And then, or you have sellers who, say, I'm going to be super smart, not offer compensation. But as you were saying, as the question came up earlier, that's going to mean that on the buyer side, when people have agreed by contract to pay their agent, buyers will start instructing their agents not to show them properties that don't offer, right? And that means those sellers are going to have fewer people to buy their properties. So over time, they're going to come back to this system, which actually works extremely well and benefits both sides. So I might sound like I'm just a mouthpiece for NAR, but I'm really not. I had my own questions about the system before I understood it. And now that I understand it, I really do believe that it works very well for both sides.
Okay, here's another question. We actually have a few of them, but I'm going to go to this one first because it's right where we're at right now. What happens if the property doesn't appraise once they have added commissions, additional closing costs to the sales price?
We'll let Bill and Ryan handle that, because they would, I mean, from lenders I've talked to, they, unless there was a significant change in the market conditions, which there could be, that's unlikely to be a problem. But yeah, I'll let Bill and Ryan weigh in on that.
Yeah, I mean, if you offer what you offer and it's supposed to cover your closing costs, Teresa, you know how that works. Like, yeah, I mean, technically that could be a scenario where that would be an out-of-pocket expense if the value isn't represented by, the appraisal. So it's I don't know if it's a likely scenario, it's a possible scenario, but it could, that could be, hey, okay, well, there's not any room for the seller to pay that amount of closing costs, and so this will be truly out of your pocket.
Yeah, I mean, it's similar to the bid over ask problem that we faced
Right.
here.
Same thing.
While back, where, we've got a willing buyer and a willing seller, but they want to buy it for more than the value. Somebody's got to come out of pocket. It would amplify that problem.
Yeah.
If indeed we got there.
Okay, here's a different question. This is going to circle back to NAR and the RMLS. One of the NAR defenses says that it's voluntary to join NAR membership, which is incorrect in my mind. This is the question poser, because you don't get RMLS access to run business if you don't join NAR. Are local associations looking into detaching from NAR?
Well, let me take it in parts. I mean, it is not required that you join NAR now, but I hear the point. Well, we want to have access to the MLS. Well, I mean, I think that argument doesn't really square up well with the outcome of this lawsuit. As I mentioned, the reason why the MLSs exist and function the way they do, in part, is because they do have a cooperative compensation rule that incents everyone to show everyone else's properties and be part of that, right? And so it's kind of like, well, either, I mean, the argument that at the end of the day from these plaintiffs is kind of like, hey, the MLS isn't really that important, you know, like we're willing to blow that up. So I get from the realtor perspective now, yeah, you want to be part of the MLS. That issue has been gone, as I mentioned, that issue having to have realtor membership to be part of an MLS, that has gone to court in antitrust claims in the past, and NAR has won that claim. So in terms of whether they'll be decoupling from NAR, you know, there are many MLSs that are not directly owned by a realtor association. Those MLSs, though, still are typically owned by realtors, right? By either a combination of associations or other members. In terms of like completely detaching from NAR and not even being affiliated at all with NAR, including the people who are operating the MLS. You know, I don't know. There's a lot of benefit that comes from this tripartite structure that includes the NAR, the state association, and the local association. And so, you know, and part of that, the smaller MLSs, they get insurance through NAR, right? And that's one of the reasons why they follow the rules of NAR, and that's a huge benefit to them. So I assume, like, hey, if NAR files for bankruptcy and the benefits start to dwindle, or their financial position is such that they can't provide the same level of benefits that provides the value of being part of NAR, then perhaps, you know, you would see more breaking off. But
Okay. Oh, I'm sorry, Bill.
I was just gonna say Ryan had to jump off everybody. That's why he's
Okay.
gone. But
Here's a different question. With a mandatory requirement for a buyer broker compensation, won't this negatively affect the amount a buyer's broker will be offered? Question mark. Therefore degrading the overall income any real estate professional may make.
I mean, we'll see. I don't think we know what the market impact will be. I mean, I think, you know, what it means is that you all need to, you know, evaluate what you believe is a fair price to charge for your services. And you all need to get really good at talking to your buyer clients about that, and about, you know, why, you know, what your client gets for the services you provide, and why your fee is a fair fee for them to pay. And so I don't think we have any way of knowing at this point, you know, what, if any, overall impact on commissions there will be. But certainly I can say this: agents who are not comfortable having a conversation with their client about what they charge and about why they're worth it are going to struggle in the real estate market going forward.
Okay, here's another question. How do you think this will affect housing prices, considering typically most current closed values have offered both commissions in price?
Yeah, again, you know, we don't know. I mean, I think at the end of the day, if listing agents are charging what they believe is appropriate value for their service, and buyers agents are charging an appropriate value for what they believe their service, and many buyers are asking the seller to ultimately pay that anyways because they don't want to pay it out of pocket, and so they're using the sale agreement to get it wrapped in as a closing cost pit, then, you know, you really may not see any difference in overall home prices, right? Because you're still, the buyer's still requesting that the seller pick it up, and at the end of the day, there's not really much of a difference. So I think we have to wait and see.
Different question. If the seller agrees to more BAC, can't the seller listing contract be amended to pay the buyer's broker rather than a closing cost for the buyer?
Yes. The challenge there, though, is you just have more steps involved. So that's another way to do it, where you could say, for example, like, hey, let's not build it in the sale agreement. Let's just ask the listing agent and the seller to renegotiate and up the BAC that's being offered. So that's certainly a way to do it. I think in that instance, what you really would want is, well, so there's a few ways that could happen. One, right, the buyer's agent can make that request of the listing agent, right? And that's always been the case. Um, if the buyer is the one asking for it, though, then what they're asking for is less direct. So if they're asking for that in a sale agreement, they're saying, hey, seller, I want you to go and now renegotiate a contract over here to up this amount. And the seller, may agree to that, but it's now dependent upon this other thing happening, which involves another party. And so it just makes it a little more complicated, but it's certainly an approach that can be used.
Different question. And
Oh,
this
and
is-
actually, let me just say this other thing though. Also the risk there, and one of the reasons why we've been more focused on the model where the buyer is directly asking the seller to just pick it up, is there is a rule in the Code of Ethics from NAR that says that a buyer's agent shall not use an offer to purchase as, to try to increase the BAC that's offered, right? And so it does create some complications of running up against that rule. And so we thought it's a cleaner way to think about it if you say buyer has agreed to pay buyer's agent a certain amount. Buyer now is making an independent decision with no influence from their agent, right, to ask the seller to pay some of it because the buyer has a financial interest in not having to pay it all, right? But you're not getting the agent involved saying, hey, let's get them to raise the BAC. So it helps steer agents clear of potential violations there. Now, could NAR update that rule or change that rule or clarify it to better work with this new model we're going to be operating under? Sure, and maybe they will, but that is something you need to keep in mind.
Okay, this is actually a little bit of a long one. So I saw an offer come in where the buyer's agent tried to negotiate 3% BAC from the seller in the purchase agreement. They verbally explained they had a buyer's broker's agreement with their buyer for 3%, and they always try to negotiate that the seller paid that fee first. In parentheses, the seller had offered 2.5% in the MLS. Since we are not supposed to address commission on the purchase agreement, how will we handle these commission intricacies without including them in the purchase agreement? Since commission is not simply between the seller and the listing agent, will it ever be appropriate for us to include commission as part of the negotiations in the purchase contract?
Yeah. So that's kind of what I'm trying to get at here is that okay, so let's break it down. I think there's really two ways to do this, right? One way is for the buyer's agent to ask the listing agent to increase the BAC. Okay, that's always been an option. It's not the sale agreement, and it's a direct negotiation between the agents, right? As long as the buyer's agent is not jeopardizing the sale, right? Because they can't use that as an opportunity. They can't use that as a way to try to torpedo the sale, okay? Because that would violate the Code of Ethics. So that's one way to do it. It's always been allowed. When we're talking about the sale agreement, the premise of the question that was just asked was that you can't negotiate commissions in the sale agreement. What you can't do in the sale agreement is the buyer's agent can't try to negotiate the BAC from the listing agent in the sale agreement. That's not what is happening when the buyer is requesting the seller to directly pay some of the buyer agent cost. They're not negotiating the BAC. Okay. They're not negotiating the BAC that was offered via the MLS. They're just asking the seller to pick up a closing cost that they now owe. Okay. So you have to not be scared of using the sale agreement. Your clients have to not be scared of using the sale agreement to ask the seller to pay for the closing cost that is their buyer agent commission. And that is not prohibited by anything. So it's just, you have to kind of think about it differently. You're not renegotiating the BAC that was offered from the listing agent to the buyer's agent. this is a new request coming from the buyer for the seller to directly pick up some of their closing costs, just like it would be any other closing cost. Hopefully that distinction makes sense. But yeah, there's no prohibition on the buyer asking for that. What you don't want to do is, as an agent, you don't want to leverage the sale agreement to change what the listing agent was offering you via the MLS.
Okay. These two questions kind of, I think, come together. And what this one says, and I think this is in referring to the forms that you were mentioning were being changed. So this one question says, can we have a box for them, the buyer, to check on that agreement saying what they want us to do, meaning, you know, what the buyer instructs the buyer's agent to do. And on the side with that too is a different question. Should the BAC be a line item in the purchase agreement? Those two questions.
Okay, so on the first one, I just need a little more, like what the buyer instructs the buyer's agent to do, like as in, don't show me properties where.
Yes,
Okay,
exactly.
got it. Yeah, that's a good suggestion. I'll have to go back and look. I can't recall if that was something we included in the draft that we're working on, but I just took note of it. So appreciate that suggestion. I think it's a good one. And then the second part of that question, remind me what.
Should the BAC be a line item in the purchase agreement?
Okay. So again, the way we're thinking about this is that you're going to have all types of situations. You're going to have a situation where the full amount of a buyer broker commission is paid through the cooperative offer of compensation from the listing agent. You're going to have situations where none is being offered, and you're going to have situations where some, but not as much as the buyer has agreed to in the buyer broker agreement, is being offered, right? And so we need a sale agreement to cover all of those scenarios. And they're different concepts. The amount that the listing agent is offering to the buyer's agent is a separate concept from how much the buyer may be asking the seller to pick up as a closing cost, right? And so the way we're dealing with it is that you use the sale agreement to indicate how much you're asking the seller to pick up as a closing cost of the buyer. And then you're using addendum that is going to create clarity about how that relates to how much, to what's already being offered through the listing agent's offer to the buyer's agent, and other details. But we don't want to negotiate the amount that the listing agent is paying to the buyer's agent directly in the sale agreement, because that's where you bump up against the rule of a buyer's agent not leveraging a sale agreement to increase their BAC. So I don't know if I fully answered it. So yes, it's going to be in the sale agreement, but I don't think it's as simple as just like a one line or a checkbox, because we've got two things going on. An amount that a seller's agent's paying to a buyer's agent, and then a separate amount that a buyer is requesting from a seller.
Okay, thank you. Different question. MLS subscribership and the NAR membership come down to shared code of ethics and rules and regulations, bylaws of the respective companies, and the enormous value add services offered by both. Membership in both, minimizing the risk for the profession, clients, and consumers. What do you think?
Yes, I agree.
Okay, cool. The next one is going to be, does the distinction need to be made in the sale agreement that a portion of the closing cost that is being asked for is going toward the buyer's agent commission?
It doesn't and Bill, I don't want Bill to jump in. We're doing that in our sale agreement for transparency purposes, and because we recognize that we're kind of entering a new world where people are going to be doing things they're unfamiliar with. But at the end of the day, from the lender's perspective, I don't think it makes a difference. If you're asking the seller to contribute a certain amount to closing costs, buyer's agent commission is now another closing cost, and it doesn't really make a difference. The thing that would make a difference is like, if you want that paid out of escrow, there needs to be some communication to escrow that they should be paying the buyer's agent out of that amount. But legally speaking, which closing costs you're asking the seller to pay for in the sale agreement, I don't know is really makes that much of a difference. But we are including it on our sale agreement for transparency purposes.
Yeah, and I'll jump in on that a little bit too. Mike Kurlinger had commented on it earlier in the chat, but I don't know if everybody can see that. This is where it's going to get hairy, right? Because there's limitations on how much you can ask for in seller contributions, and 4% for VA, 6% on FHA, anywhere from 3 to 9 on conventional, depending on the down payment, property type. He's right. 6% applies to USDA. So if you're in a situation where you have 6% allowed, you're going to be probably okay. You ask for your 6% and move on. But if you've got a 3% BAC and you want closing costs, but you're limited to 4% on VA, or you're at a 3% conventional, it's going to get creative at that point. We're going to have to adjust financing somehow to leave money on the table to pay some of these costs. So it's, yeah, tight with your lender when you get into these situations. Like, you really got to be talking about it up front so you know what can and can't be done, because you could run out of money pretty quick.
Okay.
Bill, under currently how I'll do it, like assuming we're not bumping up against the limit, do you guys care which closing costs are being paid for? No. Okay. And this
No.
wouldn't be any different. It just makes it more likely you're going to bump up against the limit, and therefore it starts to become more relevant if that's the
Correct.
case.
It's
Yeah.
just a big fee, it's
Yeah.
a big fee.
Yeah.
It eats up a lot of that contribution, allowable contribution at least.
Okay, next question is, the issue I see when asking the sellers to pay BAC in the sale agreement, as in closing costs, could be if the buyer then needs or wants additional monies because of repair costs from home inspection results, have most likely exceeded the allowed seller's contributions by the loan program.
Well, it depends. I mean, if the seller is doing the repairs, you're not taking up any of that, right? I mean, and
No,
if you're,
Oh, I'm
if
sorry.
you're
Repairs aren't part of our
Right.
seller paid closing costs, the
Right.
seller concession.
Yeah, that's outside of seller concession.
yeah, so that shouldn't be a problem.
Okay.
And Sean asked something in regard to the same thing. He asked the question directly. Consider BAC as part of the purchase cost that can allow financing in BAC. We don't know, Sean. We don't know where it's going to go yet. Time will tell.
But
Okay.
certainly, as you may already do, if the parties agree to offer more for the house, and then more in coverage of closing costs from the seller, that's fine. You're still going to bump up against the limits, but that's a fine strategy if that's the way the parties want to go.
Yeah, and
Different
bump against
question.
appraisable value.
Mhm.
Yep.
If NAR is appealing these legal decisions, why would we want to draft legislation addressing these decisions until the judgments are final?
So the use of a buyer broker agreement should have been law 20 years ago. While it is more important now because of these lawsuits, because it will prevent you from becoming part of one, particularly the buyer side lawsuits, because your buyer can't argue that they paid more because they didn't have an opportunity to negotiate commissions with you if you, in fact, make them sign a contract where they had to negotiate commissions with you. So it's going to protect you, but we should have been doing this years ago. Having you're charging thousands of dollars for a professional service. Your client is, making the biggest purchase of their life. There should be a contract that spells out what the buyer's agent's going to do for the client and what the client's going to pay the buyer's agent. That, regardless, even if NAR wins on appeal, my guess is the entire industry moves to buyer representation agreements, just because it is more transparent, it makes more sense, and things should be put in writing and clearly explained.
Okay, different question. The sale agreement is between the principals and not the agents, correct? So BAC cannot be addressed in the sale agreement. Is that not correct?
Yeah. So again, think of it as two separate concepts. And using BAC is maybe makes it confusing because BAC stands for buyer agent commission. So let's think of two concepts. One concept is the amount that the listing agent is offering the buyer's agent. The other concept is the amount that the buyer has agreed to pay the buyer's agent via a buyer representation agreement. You cannot use the sale agreement to negotiate the amount that the listing agent is paying the buyer's agent. You can use the sale agreement to ask the seller to pay for a portion of what the buyer has agreed to pay their own agent in the buyer representation agreement. So we have to rethink these things. I mean, I'm glad everyone's scared of negotiating commissions in the sale agreement because that's what we've taught you for years. But we've taught you that based upon negotiating what the seller's agent's offering the buyer's agent. We're entering a new world, the foundation of which is the buyer setting the commission with their agent. It's the buyer setting the amount, and then the buyer's decision, not the agent's decision, about whether the buyer asks the seller to pay some of that, just like it would be for appraisal or other costs that they want the seller to pay.
Okay, I think this is along the same lines, but it's phrased a little differently. A realtor is not allowed to insert themselves into a contract between a buyer and a seller, between buyer and a seller, and commissions, and are not allowed to be input into and commissions are not allowed to be input into the contract. It's about representation. They cannot insert themselves into the transaction, and that would be doing just that.
Yeah, again, it's not okay. So if let's just play this out. Let's say you're the buyer. You agree with your client to pay a commission of X%, and based on the price of the house, that ends up being $15,000. Okay, I'm just throwing out numbers. Okay, you owe $15,000. You would prefer not to pay $15,000 out of pocket to your agent. So when you're writing an offer, or you're asking your agent to write an offer, you and your agent have a conversation about it, and you say, hey, I want to ask the seller to pay some of my closing costs, including this buyer agent commission. You're not inserting yourself in the sale agreement. Your buyer is asking the seller to contribute towards their closing costs. It's just, once we establish that we're setting the commission with the buyer representation agreement, and the buyer is your client, all of this changes. In a world where there's no buyer representation agreement and the commission is being set by the listing agent offering it to the buyer's agent, that's where you're not negotiating what the listing agent is going to pay the buyer's agent. But not allowing the buyer to request from the seller what they want the seller to pick up would be a disservice to your buyer and to everybody, and is in no way against any ethical or legal restrictions.
Okay, so the next question was, so we need to have buyers determine the BAC based on the buyer's agent's value, right? Or what they bring to the table.
So you said, I mean, just think about, like, when you go to an attorney, they tell you how much they charge for their services, right? You can ask them to change that, and they can say, take a hike, or they can say, yeah, I'll give you a break, right? I mean, this is how the world operates in every other industry of professional services. All we're saying is it's going to be the same way that it operates with buyers and buyers agents. Okay. So you start by determining what you think is an appropriate price for your services, and that's what you charge buyers. And of course, like anything, that's negotiable. What negotiable doesn't mean that you have to that you have to drop it. Negotiable means they can ask you to drop it, and you can go tell them to take a hike. Or you can say, hey, you're a friend, I'm going to give you a deal. Or, hey, you're the first time working with me, I'm going to give you a discount, or whatever it is. But just like any other service you go and pay for, there's probably going to be a price listed that you've set for your services. And then there's going to be a conversation with your client about whether they're willing to pay that price.
Hey, we're over an hour and a half. And I'm good to stay on and answer questions. Jeremy, I don't know if you're good to stay on and answer questions, but everybody doesn't have to stay on here to get your CE. But of course, if you have questions, feel free to stay on and hang out and talk with us for a little bit longer. I have a little more time.
There was a question on the CE, and the CE is 1.5 hours, but like Bill said, if you guys want to stay on, and we can continue to answer questions. So the next question I saw was, don't you think the code of ethics will be revised?
I presume that the code of ethics is going to be revised in several respects over the next several years. I don't know when and how NAR is going to build that into their strategy, because, they're thinking about appeals and about, could there be a potential settlement? Any changes they make to policy is going to be in light of their litigation strategy. So we don't know exactly when it would happen, but I presume that 5 years from now, the code of ethics will look different than it does today.
Here's another one that's posed as a question or explanation. The key differentiation is that the buyer needs to make the request. The agent cannot. If the buyer is requesting seller credit in an amount that exceeds the loan program limits, and the seller wants to move forward with that buyer, a savvy listing agent can advise the seller, amend the listing agreement to change the BAC, which will cost the seller the same out of pocket, but will adjust the way the money is treated. But
Yep.
that decision must be made by the seller. They cannot be coerced by the buyer's agent. That's a fair way to explain it. Yes?
That is an excellent way to explain it. I wish I had explained it that way.
Thank you,
Yes.
Mike.
Thank you, Mike.
And I think that was the last question we had. So there you go.
You bet, guys. You're welcome. I hope everybody enjoyed it. I thought it was awesome. This has been super fun. I could dork out on this stuff all day long with you guys. And, you know, Jeremy, thank you for your time. Thank you for putting in the extra time. Thank you, participants, for all your engagement, your great questions, Teresa for hosting, and Jill for helping present this today.
And this is recorded, so once we have it put together, we can get it out to Jill. So Jill, if you want to then send out to whoever's requesting it, you can go ahead.
Absolutely.
Awesome.
Thank you, everyone.
Thanks,
Great.
Jeremy.
Thanks,
Thanks for
guys.
having me. Appreciate it.
Bye.
Take care.